What is up, Steve here. I hope you are doing well. I came across almost a disturbing article, to say the least. I want to review this and also give you some of my thoughts on it. So let's dive in. 78% of Americans say they are pulling back from the housing market due to higher rates. Goes on to say higher mortgage rates are already changing American behavior as people are rethinking their housing goals by pulling back from applying for a home loan or even shopping for homes, according to recent Forbes Advisor survey. Most respondents, 85%, say they expect mortgage rates to continue to increase for the next several months, up to 2 years. I can't say I disagree. I think the Fed's going to continually increase the Fed rate, which is going to have an effect on mortgage interest rates as well. The increase in rates caused 34% of respondents to pause looking for a home and 32% from applying for a mortgage. When asked at what interest rate would they stop applying for a mortgage, most respondents, 42%, said they would not consider a mortgage at a range of 4 to 5%. Another 27% of respondents say they would not apply for a mortgage when rates hit 6 to 7%. Got a little side note, and the side note on this is the big thing is the price of homes. You know, you could have a high mortgage or a high interest rate, and I've had them in the past, and but the price of the property was extremely low. So if you have a very high real estate price and you have a very high real estate mortgage interest rate, it's really going to have a devastating effect on what you're paying monthly. Likewise, 33% of respondents say they would not consider refinancing their mortgage at a rate of 5%, while 29% said they would stop at a rate of 4%. And right now, if anybody is refinancing, I think that they're probably in some sort of financial trouble. I know other people are taking advantage of home equity lines to pull some of the equity out of their property, which could be a good thing or a bad thing. I think it could be a bad thing if they're taking that money and they're putting it into maybe improvements in the home that they don't necessarily need, or they're taking that money and they're buying a boat or a car or something like that. But if somebody is actually utilizing that money to reinvest, say, into maybe a property that they are going to rent out, that might be better use of those funds if they're tapping into the equity position on a property. But if people are just doing a refi right now at 5.5%, I think that they're probably in some sort of trouble. Not all, but some. For those who are considering buying a home, 27% of respondents say they will wait longer to purchase a home because of the higher interest rates, and 26% said they are choosing to rent instead. Housing experts say that choosing to rent because of higher rates might be short-sighted in the long run, because mortgage payments are often more stable than the cost of being a tenant. Now, I think that there's some truth to that. However, the peace of mind of buying at the top of the market and not taking on hundreds and hundreds of thousands of debt that you have to pay back, that you potentially could be upside down on, could be devastating for people. So that is something that I think people are outweighing. Also, what's not talked about is I think that rent rates are going to come down. I saw it in the last real estate recession. Rent rates did come down here in Southwest Florida because there was an oversupply of properties that were coming to market, and a lot of investors had to reduce prices. We saw also apartment complexes. They're offering all sorts of incentives, like 2 months for free if you signed up for an annual rental. We can see here too the Fred chart for rental vacancies in the United States. Right now the vacancies are extremely low. However, I anticipate that to go back up just like it did in the last real estate recession here. The safest long-term investment in America is real estate ownership, says Paul Benson, a real estate agent with Engel & Volkers. It's still going to continue to appreciate. People need to think about getting in before they are left out. I don't really like that kind of preaching. I do agree that real estate is good for the long term. However, everybody's circumstances are different. And if, let's say, somebody gets into a property, they pay $350,000, and let's say they paid at the top of the market in their area, and let's say a year later the market goes down just slightly and they don't have much money in their pockets at all, if they had to sell that property, remember there's closing costs in the back end, so if they have to sell that property, they're going to actually have to come to the table with cash at closing to get rid of that property. If they don't have the cash at closing, then they're upside down or they're stuck in the property. People's circumstances change, and it changed drastically and quickly sometimes, whether that's a divorce or a job relocation, for as an example. So I think that there's some truth to what this guy Paul Benson's saying, but everybody has to outweigh what's going on in their current life and make sure that they're not getting themselves in a situation like that. It's important to keep in mind that while rates are higher than a few months ago, they're still historically low. Benson says today's 5% rates pale in comparison to the 18% rates in the early 1900s and still below the 7.8% average in the 5 decades of Freddie Mac data. Now, the problem I have again with Paul on this, different market, completely different market. We've never seen real estate prices this high ever in history before. If you want to compare 1980s with 18% rates, it's probably lower monthly for that same type of house than you're paying right now in today's day. Most respondents, 36%, say while the interest rate is a key factor when deciding on a mortgage, it's not the most important cost to them. 21% said they are more concerned about closing costs than interest rates. Now that is pretty interesting because a lot of people don't understand there is a cost of conducting business in real estate, whether you're buying or selling. And let me just read this last thing too before we get into some of my comments on this. The cost of housing overall has jumped substantially in the past, with the closing costs nationwide up 13.4% in 2021 compared to the previous year. Now the problem we have right here, and people are calling it appreciation, which technically it is. I think it's almost a fake appreciation in terms of where we're at with real estate values, but closing costs are directly correlated with the price of the property. So as the price of the property or the value of the mortgage goes up, the costs associated with it, closing costs associated with it, are going to rise. This is why a lot of people are seeing a big increase in the cost of obtaining a mortgage. So what do you think? If you're a buyer right now, would you be buying at say 5.5% interest with property values this high? And if you're a seller, are you on the fence right now about selling, tapping into that equity? Or if you're a homeowner and you have this equity, are you thinking about tapping into the equity with maybe a home equity line? Drop some comments below. I'd like to hear about it. Thanks a lot for being here. And as always, I'll see you guys on the next video. See ya.